Now about income and money. A lot of people making this much money, they have this income, they have savings. What kind of income you guys look at, and is there any income that you guys are not able to
Excluded,
look
sure.
and not able to count it as
Sure.
an income for loan?
Anything you document, okay, really easy. What IRS knows is what I will know, okay? If you don't tell the IRS that you make $20,000 because, I don't know, whatever you do on the side, I cannot use that income as part of the loan application. That's really simple and easy, right? So if they don't know, I can't know, and I can't give you credit for that. So W-2s, 1099 income, self-employed income, as long as you give me tax returns and 1099s, and in some cases I don't even need, because I know for self-employed borrowers, a lot of times people think you need 2 years. Most cases, yes, I will have to say that. However, there are exceptions for self-employed applicants when you only need 1 year of tax returns. You call me about that. I don't want to get into that here because there is a criteria to meet there. But what doesn't count, cash money. I can't give you credit for cash income that you earn because you earn it under the table, right? So, if you have cash deposits coming into your checking account every single week, $500, but it's not on your tax return, nor is there a way for me to track it, I can't count it. Another one is benefits for, what is it called? Student loan, not student loan, but VA paying you for your schooling. GI Bill. I can't use your GI Bill. It's wonderful. VA is great paying for your schooling. Because why? Because it's not going to go on forever. That's why.
Okay.
So it's only while you're in school. It's paying for your schooling. It's paying for your books and things like that. But it's not going to go on forever. So those are the income sources that I cannot count. But there's so many that I can.
What about some people have their older parents, or they have some members of the family that receiving SSI checks or this kind of income, or maybe like 3-4 people in the house, they are working and they getting money. Can they count as together?
That's a great question. So when you have multiple members in the household, but only one person or one couple is on the mortgage, but you have, let's say, parents who are making money, we cannot use those parents' monies on the loan application as far as like debt to income ratio qualification. But in some cases, not all, we can say, hey, we have it's called a compensating factor. We have a compensating factor. We have an elderly parent living in the house. They make an extra, $1,000, for example. Let's make sure we take that into the consideration because the kids are taking care of the parent. Here's a social security letter that shows we're in charge of the parent. Well, if it's, so that's where, again, we cannot count that towards debt to income, but we can argue the point of, okay, we got a quick compensating factor here. Let's take a look at it. And sometimes underwriters would review it and say, okay, we agree, we'll offset this higher debt to income ratio by having this compensating factor.
So some lenders may not even look at it.
That's correct.
And you're gonna take your time and
Yes.
you're gonna make sure
we're gonna dive into that deep. Exactly. We're gonna find all those sources. We're gonna talk to these folks and say, tell me what else you got going on in the household. And some people don't want to tell me up front. But I'll explain why I'm looking for it, because then I can be like, look, I can help you with this if you've got some other sources of income that you might not even thought of using.
Yep. Awesome.
Yeah.
Awesome. Now, next one, people have cash savings.
Mm-hmm.
They maybe sold something back from their country. They brought cash. As they were allowed to, whatever. They sold some cars. They sold stuff on eBay or garage sale.
Sure.
They have cash.
Yeah.
They want to do a down payment on a house. Is that an option?
Yeah. So cash money, no. No, not yes and no, but under most circumstances, unfortunately, cash money cannot be tracked. Why? Because I could have given you this money to buy a house. Victor could have given you this money to buy a house. We call it non-arm's length. We call it like non-arm's length transaction. See, non-arm's length, because we're close. We're involved in it with you. So there's no way an underwriter can track that neither myself or Victor or anyone else involved in the transaction, including the seller, might have given you this money to buy this house. So cash in a safe, cash in your mattress, unfortunately that does not count. Selling something, get with me, because I have a list of exactly what I'll be looking for, and typically that list will not be checked off if you've already sold something. If you haven't, I'll tell you exactly what to do. But if you sold, I'll need the bill of sale, I'll need the blue book value if it's a vehicle, I'll need the seller or the buyer can only bring a cashier's check, they can't bring cash. There's certain things that are involved that we will walk you through, if you think of selling something. And please tell us that up front. That is the key here. Because if you think you're going to have $6,000, because sometimes a buyer could tell a lender, I have $6,000, and the lender will stop at that. But then I will go deeper and say, okay, is this $6,000 in the bank? And they're going to say, no, it's my car that I have for sale on Craigslist. That's not $6,000 they have. I have to look at what's in the bank. Until that vehicle's sold, I cannot give you credit for that $6,000. And then I have to document the sale of that vehicle. So, easy answer, cash money cannot be counted. You can use that to pay your bills, so you can save the most amount of money in your bank account, by continuing, putting in your paychecks or having them directly deposited. But cash money, no.
So somebody might think, oh, Ira told me so much stuff that my cash is not going to count. I'm going
to go somewhere else, whatever.
Yeah, I'm going to go somewhere else. Why do you get in those details? Why are you saying
Why is
all
it
this?
so important now?
Yeah, why is it so important? Yeah.
Now, in the beginning of the transaction. Because guess what? When your file gets to the underwriter, by the way, at any other bank, that happens at the end of the transaction, when all the problems arise, aka the 11th hour and the 12th hour fire drills I was talking about earlier. So when your file, because Ira said all this, and you're like, well, no, some other banker told me, it's okay, don't worry about it. But the underwriter still has to track it all. So when it gets to that, that's when you have problems. Because the underwriter's going to be like, where did this money come from? And then you're back to square one of having to document all this when it should have been done in the beginning of the process, so there's zero stress. Now you're under contract, now you got a deadline, and now you're trying to fix all these problems or fix all these issues that are probably not fixable. Okay, so that's why you do it up front.
So basically people miss closing dates, people mess out transactions, and people have more problems. Okay.
Yeah.
Got it.